All right, guys. What is going on? What is Gucci Gang? What up, man? What is good, everybody? 30, 35 starting off with. Very nice. Very nice. You gotta love it. Chat is members only today. Members only chat today. And I don't know how much we're gonna get. I don't know what we're gonna get prior to FOMC here today. So I might yap for the next 55 minutes. That is a strong possibility. That is a strong possibility. What's good, Smalley? Robert, Naruto, Miguel, Mason, Bazell, Leon, Eminem, Flacco, Bruce, Victor, Earl. I got a few questions on that. Even the app, like when I downloaded the Chevrolet app or the My Chevrolet app, they were like, you got to name the car. I was like, this ain't a fucking boat. It ain't a boat. You know what I mean? I'm like, I don't know. I haven't thought of anything. So I haven't named her yet. I have not named her. What's good? Marshall, 2020, Shay, Shampoo. What up? Sean. How does it feel to wake up with a Corvette in your driveway? It's still a little bit surreal, but it's fucking awesome. Look, let me tell you this. I haven't taken a video and pictures because the weather right now is shit. It is shit. Okay? It's absolute garbage. Okay, look at this. You might not be able to see it. Unplug it. Right now, it's 64 and cloudy. All right, 64 and cloudy. It's not going to be sunny until Friday. So Friday, I'll share pictures, probably share a video. Obviously, I'm going to make YouTube videos as well, you know. But outside is shit right now. And when I looked outside this morning, there's a bunch of fucking leaves on it, too. I'm like, ah. So, but it's cool. It's cool. Saw my neighbors staring at it the other day when they were, because I'm in a cul-de-sac. And my neighbor down the street, they come down to the cul-de-sac to turn around to go back to their house. And I saw her doing a U-turn and she was looking at it. And then the neighbor across the street, same thing. They were like looking out the window. They were like peeping Toms. Whose car is that? You know? Which is funny. It's cool. Yeah, Leon, it feels fucking awesome. Oh, the thumbnail's the same? Oh shit, Flacco. I did not change it. Yeah, I did not change it. Let me see. Give me 2 seconds here. I keep forgetting where I put half my shit. Okay, don't go anywhere. Because I'm going to teach you how to trade. And it's like, oh, stop doing this. You mean stop getting sniper injuries? Stop getting it right, John. How do you not miss, bro? Well, I do miss sometimes, but I didn't miss today. And I'm going to tell you exactly how I did it. As per usual. So just bear with me here while I find it. While I find it. What I need to do is put it somewhere that's more easily accessible. Here it is. All right, found it and updated. Appreciate the help. I fixed it. Thank you. What's good, Amin? Thank you, Pip. Or thank you, Shampoo. What's good, Joe? I knew one of you were going to ask that. Day in the life video. What the fuck do I look like to y'all, dude? What do I look? Who do you think I am, bro? I guess I'll do it. Thanks, Leon. What's good, Hadar? What's good, everybody else? All right, so let's get into it. What can you tell me about the dollar index today? What can you tell me about the dollar index today? I gotta join some of these Corvette pages too. I didn't think about all that shit. Too focused on the grind, baby. Too focused on the grind. Sometimes I don't have time for that cool shit. That cool shit can wait. We gotta make money first. You know what I'm saying? But yeah, what can you guys tell me about the dollar index today? What were we looking for? We had these lows marked up. 108.06. Why would we do that? What up, Big James? Amin says market maker sell model. Okay. Let's walk through it. For those of you that might be new here, because I feel like we are getting we're getting more views, which means we have regulars, but we have some newer people as well. I can tell. So for those of you that have never seen this before, this is what that looks like. Okay, this is just my version. You know, it's not something I made up entirely. You know, I put a few things together in a little bit of context, and this is the image that I like to use for myself. It's in my brain already, but to put it onto paper in a visual format, this is what it looks like. Consolidation, this is a buy model. Consolidation, distribution, redistribution, a higher time frame concept like a pool of liquidity, a higher time frame imbalance, probably both. Cool. Then after manipulation comes the low risk buy, then the first leg accumulation, reaccumulation, and then a run to opposing liquidity. Okay, so again, this is a market maker buy model. Okay, and so a market maker sell model is the opposite. Okay, it's the exact opposite. Consolidation / equal lows or low resistant lows, which we call original consolidation. All right, then accumulation, reaccumulation to go higher, same thing. Higher time frame concept, yesterday's high, last week's high, London's high, something to that effect. Manipulation, low risk short, either up in here or just after. First distribution, redistribution, and then this is the second leg run to liquidity lower. Okay, so the manipulation, or like say even a higher high, it doesn't have to be, these don't have to be this far apart. Okay, this can be very close together. And what I mean by that, and this is why, you know, we have to view the charts and go over things, because you might not have looked at this like that. You might not have looked at this like a market maker sell model. I did. Do we have, okay, because we were right in here. I think I said it 8:10 or some shit. It was like right in here this morning. And I think Nikki was like, oh, the live session. I was like, man, you know, fuck going live. I mean, I just wasn't feeling, I was tired. I told you guys I wasn't always going to do that every morning. I just can't promise that. Is this consolidation? Yeah. We moved pretty sideways. We left it. We traded back into it. I mean, you can just easily extend that over. And then we launched off of it. Now, this is short-term manipulation to go higher, sure, but my focus is these two lows right here. Those two right there. You see that? So this right there, for labeling purposes, those are low resistant lows. Now we have a third one here. 2 is great, but 3 is even better. So those 3 put together, there's going to be liquidity there, especially for those who are already long on dollar, or the inverse, whoever is short on euro. Dollar higher, euro typically lower, right? We have original consolidation. We trade higher, we drop down, we have a higher high. But look up here. Okay, I don't know if there's some on the higher time frame up here. I don't remember from looking at it this morning. Off the top of my head, I don't know. But that is a slightly higher high. High resistant highs. You remember that? There is, Mason? All right, thank you. What's good, Toby? So, higher high, fractal high as well. And then we trade lower. We trade through 5-minute time frame on dollar. These up candles we trade through. That low we trade through as well. And then the actual candles low we trade through a little bit later around 8:15. See that? I didn't wait for that candle to tell you. You don't need that. There are ways to tell, you know, when you're at a reversal before, you know, waiting, for your break of structure. Okay. I posted well before the break of structure as per usual. Okay. What's good, Alex? So what are you starting to see here? What are you starting to see? High bodies, okay? High, low, higher high, lower low. That's easy. That's a mitigation then, or potential, right? Potential mitigation. High, low, higher high. We have lows down here. So what can you reasonably expect? What's a reasonable expectation based off of my mitigation model? Based off of the free beginner series I did last year. Oh yeah, the higher high, if we're looking for shorts, that's a stop loss. If we're looking for lower pricing, the low resistant lows are a target. So realistically, what can we expect? Well, we have a mitigation here, and then we have an imbalance just resting right inside of it. Resting right inside of it. So what's likely to take place? Oh. Imbalance. I'm not even sure if that imbalance meets, but it does hit the mitigation. Okay. Drops lower, up candles here, extend those over. Notice where price never goes to. Never moves beyond it. Okay. Again, breakaway, mitigation. There's a small gap right there too. Right there. That it does reach into. See that? You know what else too? If you were really paying attention this morning, there's a small inversion right there. I don't really look at it that way, but it's right there. See that? Extend that over. Okay. But anyway, moving forward, those up candles, they get traded through. So price comes back up into the up candles, and then that was your second leg to go lower. See how that works? And yeah, I agree, Bazell. I agree. So where is the sell model, right? Again, consolidation, accumulation, reaccumulation, manipulation, distribution, run to liquidity, right? So green boxes for accumulation, pink for manipulation or just meeting liquidity, and then red for distribution, right? Green higher, red lower. That's fairly common, right? So this would be green, roughly. Okay, again, it's usually not going to be picture perfect, but we could say accumulation, manipulation, look, I gotta warp it. That manipulation was so small, I have to manipulate. I have to warp the chart because it's so small. After manipulation, low risk shorts. The next candle entry. Low risk shorts. We drop lower, we consolidate, right? So again, sometimes this still bothers people. Oh, the markets are consolidating. I don't want to enter in here. These are where some of the greatest entries are at. I'll say that again. This is where some of the greatest entries are at. Why? Well, you can expect consolidation. What do you mean? If we got a mitigation play already, okay, well, we have manipulation, low risk short. Then we have what? Our first stage of distribution. So we can expect some level of consolidation. Right? Then that's why I pointed out that down candle at 8:55 specifically, because what's next up? What's next up? 8:55, boom, 9 o'clock. Oh, 9 o'clock. What's special about that? The open of the hour. The open of the hour. See that? Open, rallied, up candles. That's your second leg to go lower. See that? And I'll just highlight what I'm talking about. That sell-off right there. That is your second leg of distribution. This should actually be red. And the consolidation was really here. Because we came up, traded off of it, up one more time, and then sank. So this is your second leg to go lower. Notice how it just runs straight there. It wastes no time. It's fast. Like a Corvette. You like that? First leg was cool. Second leg was faster. As per usual. And yeah, Joe, I do somewhere. Buy strength, sell weakness. Okay. So we'll pull this up one more time. Consolidation, accumulation, reaccumulation. Sometimes either I can't spot a reaccumulation or there's not one. So consolidation, accumulation, you could call this a reaccumulation, I guess. Like reaccumulation to go higher if you want. I mean, if you're trying to be perfect, you know, and you're just a perfectionist and you have to label everything, I guess you could do that. To me, that's a little bit of a stretch, but if you're saying, John, you have to be picture perfect, that's what I would do. Then manipulation, accumulation becomes distribution. Accumulation, again, stretches over to become distribution. What you sow, you shall reap. Okay? Notice how we did that. When I measured this earlier, okay, all I was doing was drawing from the bodies. I drew from the body high to the body low of this consolidation. I did not include the wicks, right? Now this is where your jaw is going to hit the floor, because you probably didn't notice what I just showed you. Think about it. Think about what I've been telling you. Every concept has an inversion. Every concept has a premium and discount. And I told you already multiple times, I know I told you this yesterday, you can trade concepts, premium and discount, that have not been traded through yet. Yes or no, chat? Drop some ones if you know what I'm talking about. Yes, John. Concepts can be inverted. Every concept has premium and discount. And yes, you did say that you don't have to wait for a concept to be disrespected to trade it. Drop some ones in the chat. You can drop twos if I'm lying. Okay? I can't control your keyboard. I can't, you know, my hands aren't on the keyboard. Y'all are the ones typing. If I'm lying, drop a 2. Okay? Now watch this. I promise your jaw's going to absolutely either hit your desk or hit the floor. Accumulation or reaccumulation. Okay? Reaccumulation becomes distribution. Accumulation becomes distribution or redistribution. Okay? These up candles and price traded up into is where? The premium end of the first accumulation. Did you see that? Probably didn't notice that, did you? I didn't notice it either, but we're here. I'm looking at the chart and I'm going, oh yeah, that's right there at the premium end of this original or the first accumulation, which becomes redistribution. And that's where we got our redistribution price levels from. The market does trade outside of it a little bit. It's allowed to do that, but look where the bodies are. Look at where the closes and the open is here. It's inside. It's become an inversion. But it doesn't have to trade through it and then like it does here. Oh, then it trades through it and then back into it again to continue lower. That's great. But I'm talking about right there. Take this accumulation, cut it in half. Premium level, discount, or like premium end, discount end. This is the premium end. You see that? That's pretty cool. Is it not, chat? Is that not cool? Or is what I teach you kind of just like, yeah, you know, yeah, John, you know, this is mediocre at best. You know, there's better shit out there. I mean, maybe you're right. Maybe you're right. But are you consistently getting wick entries or not? Are you consistently on the right side of the market or not? I would rather, if it was up to me, I'd rather be on the right side of the market. But when you start getting on the right side of the market, it's even better to not spend a lot of time in drawdown. And this is how you're able to get those entries. Does that make sense? So let me go to my downloads folder real quick so I can show you. Okay. That's all my chart had on it was this. That's it. I didn't have any levels drawn out. I didn't draw out the mitigation, didn't draw out the manipulation, didn't draw out the consolidation. All I pointed to was 108.06 in the Discord in advance. Prior to any mitigation, prior to any imbalance, prior to any up candles to trade later. Those wicks are bomb. Yeah, exactly. But now can you see it? We've been trading higher and higher and higher and higher and higher and higher. So we are in a deep premium. That's not based off of any price level. Look at the fucking chart. The markets don't go up forever. Right? So you go, okay, yeah, we're definitely in a deep premium and there's trailing stops here because you know, can y'all see this? Y'all probably can't see this other end that I'm talking about down here. Higher and higher and higher and higher and higher and higher. So what I'm saying is from this low all the way up to this high, you don't need a fib tool or a GAN box to tell you that we're in a big premium. We're very, very on the high end. Okay. So that's enough to say, yeah, higher high, potential mitigation. There's liquidity there. Maybe beyond that, maybe. You have an imbalance up here that wasn't, you know, that was left halfway open. Bullish in the short term, but could be a target later on. All right. And again, which you do see that already. We meet the lows, we rally a little bit, only to go back to the old reaccumulate, or fuck, the old accumulation turned redistribution for the continuation lower. But you can tell that the market came back eventually for sell side delivery in here, and then moved obviously beyond that. But this is just a 5-minute chart by itself. We did no other. We didn't go to the daily. We didn't go to the 1 hour, the 15-minute, nothing. Strictly 5-minute by itself. Was good, Jordan. 8:35, 9 o'clock. So when was that opportunity? 9:10 was here. Right there. Okay. Redistribution. Second leg inside of a macro. And your macro open is up here. So it actually does trade above the MOP as well. So you had macro opening price, 9 a.m. opening price, and up candles, post mitigation, post manipulation, right? So why do I share these things with you? They're going crazy right now. What are they doing right now? What are the indices doing? Oh, what the fuck, dude? Oh, those are some old equal lows from yesterday. Let me just take everything off. You see that? Those right there? Look at that. Look at that shit. Stabbed into it, traded off of it. ES has a bunch of shit from yesterday. Imbalance down here that it traded into. Oh, that's another thing too. Y'all remember these levels from yesterday? Remember Sunday's gap? And I told you 105.50 would be like my target, and that was the high of the day to the very tick. I know I put that in the market review yesterday, but that's pretty fucking scary because there was like 70, 80, 90 of you on here yesterday, and we talked about that. I said 105.50 would be my target, and that was the actual high of the day. Has your mentor ever called out the high of the day? All right, that's enough, John. That's enough. Yeah, indices today, man, I don't even fucking know. We had NQ make many lower lows while Dow was making higher highs, and I was gonna short, but I was like, nah, Dow's the strongest index. You're gonna long, or you're gonna short the strongest index. Don't be a dumbass. And then of course, you know, we get a 200-point move, 300-point move. So you gotta love that. You gotta love that. But anyway, let's come back. So what I was saying, why am I showing you this? Because even though it seems complicated, right? Some of you are like, oh my God, this is a lot of shit. Well, it is. But if you want elite level precision, you need an elite level of understanding of price, period. Unless you just bank on getting lucky. Oh yeah, one out of every 10 trades is a banger. Yeah, I post those on my Instagram story, but the other 9 are just fucking dog shit. And you know, I never share them because they're ass. It's like, no. You figure out why that banger was a banger and then try to replicate that. The reason that I teach you guys all of this stuff is because, again, I say this all the time. Every stage has its own characteristics, right? Every single stage, which is why, for example, sometimes we look at ranges. Where's that low risk short? Above 25%. Where was this mitigation? Above 50%, which is a premium, but guess what? It crossed 50% at 820. So when it crossed 50%, that's your signature, that's your sign, that's your text message with the notification on saying, hey, I just crossed 50% and closed below it. I'm bearish. Remember that? I talked a lot about that, I think about a year ago, give or take. My perception of time isn't what it is, or isn't what it used to be. Remember, we used to talk a lot about that, chat? Crossing 50% and then going back into a premium, or crossing 50% to the upside and then back into a discount for longs. Do you guys remember that? Same thing. Drop some ones if you remember, or drop some twos if I'm lying. If I'm cap. How about that? I'll be hip with the lingo. If I'm capping, you can put 2 in the chat, or you can drop a 1 if you remember. Same shit still applies. Rules haven't changed. Markets haven't changed. The markets are always constantly changing. No, they're not. No, they're not. Volatility, maybe. Small ranges to big ranges, sure. But conditions, no. The mitigation still works. Manipulation still manipulation. Old accumulation still becomes distribution. Crossing 50% back into a premium, still logical. What are you talking about? Shorting above the open of the hour still fucking works. What are you talking about? You learn everything that I know, and I promise you, you will see through everyone's garbage. You're going to realize that most people don't know a fucking thing about price. They just don't. Let me come back. Sorry, I keep getting sidetracked. Every stage has its characteristics. Manipulation is shorting above old highs. The low risk short is right after that, or like one of the next retracements. If you don't get a deep retracement, that's a very weak market. That's good. That's what you want. Respects the mitigation. Well, John, I'm not in on the mitigation. I missed the low risk short. I missed the mitigation. Oh, it's over. It's over. I got to log out. I got to go do something else. No, you don't. Because if you're at first stage, what comes after that? The second stage. So you can miss shorting above old highs. You can miss the low risk short. You can miss the mitigation model, or the, like I say, an inverted gap, right? You can miss all of that. Remember the other day we went over, there was like 8 opportunities and you missed the first 3 or 4. Okay. Well, what about number 5, 6, and 7? What do you mean? So, okay. We sell off right here, 50% right there. That could be a short. Now, I know what some of you are going to think. Wait, John, hold the fuck up. You always say price trade, or you always say that price consolidates around 50%. It does. Not always, but a lot of the times it does, especially on higher time frames. Sure. But what's the difference here? What's the difference at 9 a.m.? You no longer have just price, because price is consolidating. Oh, this is ugly. I wouldn't trade that. Well, you wouldn't trade it because you're a fucking dumbass. I would, because now instead of just price, now you have time. 9 a.m. open above it. And price has already shown proof that it's going to trade lower. It's trading towards down here. Is 108.13? Has that met 108.06? No, it hasn't met 108.06 yet. So it trades back up at 108.17, 18, and it's giving you one more chance to get in. Even that next candle at 905, one more time higher to get in before the short. What do you mean? There's always a chance. You remember last week? You don't have to type ones in the chat. But do you remember last week when I showed you, I said, look at a down leg. I said, look from a low, or excuse me, from a high down to some lows. I said, look at a sell-off. Okay. I just said, look at it. That's all you got to do. And then we pulled up old reliable. Old reliable. Open, open, high, high. You want to short above the opening price or close to it, right? That's ideal for shorts. Yes. You want to try and hold for the expansion lower, and you want to TP on the way down or close to it, right? And so I told you, when you look at a sell-off, whatever time or multiple time frames, whatever time frame you're looking at, look at it like this: open, high, short, hold for the close. Open, high, short, look, hold, look for the close. Okay. What do you see in all of these candles? Especially that mitigation: open, high, short, hold for the close. Now, obviously, not just hold the trade for 5 minutes and then TP. No, hold for the expansion down to the lows. But almost every candle in here offered a chance to go short. This candle has no wick on the upside. So could you short above that candle's open? No. What about this candle? It trades up. That's a short. Now, mind you, you would have taken some drawdown, but it only came back up for that lack of wick here. That could be a short. What if you missed that? Next candle, open, high, short, hold for the close. Well, what about this one? Oh man, John, it came back above my entry. Yeah, it did. Yeah, it did. I can't tell you what every single candle is going to be on a 5 minute time frame. Not, oh, like next candle's lower, next candle's lower. You know when to expect expansion in a direction, right? The second leg. The second leg, that's when you go, oh shit, big candles incoming. Bombs are about to get dropped. Not literally, but you get what I'm saying. You're going, okay, that just got rejected. We already did our first leg. This is the second leg. Okay, big candle should print. And then boom, boom, boom. Straight down. So it's okay to take a little bit of drawdown. If your stop was up here, why would it go up there? Because that's a breakaway imbalance, and we've already met the mitigation. These up candles in a bear market should be respected. Are they respected? Yes. Look at them. The bodies of these two up candles, just stretch it over. Look at it. Does price ever trade beyond that? No. That's how you know what up candle to short. Right? And I used to get this a lot too, because people used to tell me this is, and I promise you, you probably did the same shit. And I know I taught it this way for a little while too, so I ain't going to say that I'm perfect, but this is what people used to come to me and say all the time. Well, John, it's that last up candle, man. Why didn't the market go up there? Why didn't it do it? Oh, but John, you talk about two candles put together. Oh, I didn't hit that either. Man, I didn't get in. Oh, fuck the rest of the move. Now I'm pissed off. Oh, John, you suck. You're a shit mentor. Right. You're asking for too deep of a retracement because these up candles are inside that breakaway. And if it's a bearish market and that's a breakaway, it ain't fucking coming back for you. You asked for too much. You got greedy. You wanted that 618. Heavy markets don't give deep retracements. Or super bullish markets don't give deep retracements. But I think, drop some threes in the chat if I'm right. Drop some threes if you've ever done that. Oh yeah, John, I put my entry for short at the very, very last up candle and it never got close, or maybe it kind of got close, but never got there, and then shits the bed and I'm not in it. And now I'm mad. I'm angry. Wasting my time on the fucking charts. Man, I wanted it to go lower. It went lower, but I'm not in it. I didn't make money. I would have passed my combine. I would have passed my funded challenge. I'd have bought a Corvette by now. Chat, I've been there too. Literally, okay? I've been there too. I used to do that same shit. Oh man, these up candles, I missed the up candles. And then I had to learn. I had to learn about mitigation, what that was, how that worked. Then over time, I had to realize that the mitigation only works, well, it works a lot better when there's an imbalance. But then I had to learn, well, there's a difference between like a normal imbalance. We don't really have one here in this leg here. But then I had to realize, oh, the first one's typically a breakaway. Then I might trade the second one. Where do you think that saying comes from? Oh, if there's two imbalances, you trade the first one with a stop at the second one. Because the second one, the higher one in shorts, is typically a breakaway. You see how all of these things fit together? Do you see why I tell you these things? because it all fits. All of this is in order. Consolidation after consolidation becomes accumulation. After accumulation becomes reaccumulation. After reaccumulation becomes manipulation because they're distributing. After manipulation comes the low risk short. After low risk short comes first leg distribution. After first leg distribution comes second leg distribution. Y'all see that? Are you starting to see maybe some notes you took a long time ago are starting to reconnect with notes you're taking now? And you're going, oh yeah, that's why you said that. That's why I wrote this down. Or maybe you didn't write it down and I'm reminding you and you're going, oh fuck, I got to write that down. You should have notebooks full of stuff by now, but it's neither here nor there. It's all in order. It's never going to be out of order. Okay. Do you know why? Do you know why? Just take a guess. I've said it time and time again, but just give me your best guess. Why do you think the things that I teach you continue to work? Right? Let's go take a look. While you tell me that, let's go take a look at euro, because I called for lower dollar and I also called for higher euro. Did we not get higher euro? Of course we did. 104.08. And one of you, I think it was Natasha, you traded futures. There was a gap right here on futures and you ended up trading that. Look at that. Is Natasha here? I think it was Natasha. She got a wick entry and straight to profit. Some of you took that trade today. Some of you took or something right after. How does that feel? Real talk. How does that feel to get a wick entry and have price run straight to profit? No drawdown, wick entry, straight to TP, or maybe you held. I didn't call out way up here. I just called out that. Same thing with dollar. The next available imbalance is up here, which again, price does overshoot. But how does that feel? Feels like you're on a roller coaster, right? Going up and up and up and up. And then when you finally get to the top and then swoosh, that's what it feels like. Price just goes whoop, straight up. And you're like, oh my God, that was a really fucking good trade. Man, I should have threw more lots on there. No, you shouldn't have. Respect the risk. Respect the risk. It was a good trade. Log it. Keep your cool and move on. Because they're in alignment with how the market is programmed to function and operate. Right, Naruto. Right. MMXMs didn't click until I watched your lessons. Took me years trying to figure out the jigsaw. It was the same for me, Joe. Right? ICT got pissed off at me a long time ago, like in 2021. And he got pissed off because, I don't really mention him a lot. I don't give him his flowers, essentially. And there's obviously, many reasons for that, but market maker models were introduced to the community by ICT. There's no denying that. But when I taught you them, I told you the way that I learned market maker models was not the way that I'm teaching you. It wasn't in detail. It wasn't given to me that they all have specific criteria, that they're in order, that there's all those nuances and stuff. This is why when you see me place stops, or sometimes you see me trade without a stop, because the stop loss is built in like to the max daily limit on Top Step. Okay. Like if I'm willing just to go the full max daily risk, I just won't have a stop loss on. And I'll just get stopped out and that's it. But when you've seen those videos, guess what? It never even came close. It never came close. It would get me in, immediately be green, and never go red. And that's why. Okay? This is why. Because I'm trading specifically, right? Like, oh, it's not here on Euro USD, the currency pair. It is on futures. Okay, I'm on 6E1. Do you see it? Right there. That little space right there. See that? It gapped down. It was respected to go lower. This was accumulation. Okay. How's that accumulation? The dollar's higher. If the dollar index is higher and euro is the opposite, well, then euro should be lower, huh? Well, yeah, John, that makes sense. Right. So then why the fuck is it higher? Why is it higher? That's accumulation. Now, the euro USD currency pair, I think, had equal lows, but the futures, it had a higher low. And then this became, you know, it was bearish a little bit, got traded through. So what was once bearish is now bullish. What you sow, you shall reap. And that was part of this imbalance. And that is a breakaway gap here. You see that? Right there. Shit. Damn trading view, and they're fucking bullshit. Okay. I'll make it a different color just so we can all see it. We got wicks in here all over the place, right? We got wickage, gapped, then imbalance. That's why you see it trades into the imbalance, doesn't reach the gap. It stopped at the old inversion here and then took off. You see that? You see how that works? Entry, the stop could go to this low or this low or this one down here. This one down here is definitely a wide stop, but it can go below that low right here. And that's what people are afraid to do. I know you are. I know you're afraid to do that. Well, most of you. Some of you probably might not be. But some of you won't have a 5 pip stop. Oh, no, 5 pips. Oh, fuck. I don't know about that, John. Well, in points on futures, since there's really no spread, that really is about 5. Maybe 6. 6 points. That's like $60 a contract. For how much on the upside? $33. So you would have risked like $60 a contract to make 330 based on that. Would you risk 60 bucks to make $300? Drop some, we did 3 already. Drop some 4s in the chat. If that's something that you would do, would you risk 60 bucks, a decent dinner, right? A decent dinner for one, maybe 60 bucks to make 300, and the move only lasted from 8:35 to 9:40, not even an hour. None of you make $300 an hour. Maybe, unless you're a lawyer or a doctor, you know, some shit like that. Yeah, you could clear 300 bucks an hour. But for most people can't make $300 an hour. Most people can't make $300 a day. And this is what the futures market can give you. Even Euro futures, right? One of you asked me the other day, "Oh, John, do you still trade Forex?" Dude, fuck Forex. Fuck Forex. Okay? All that spread and broker manipulation. Dude, futures can pay as well. You know what I'm saying? Think of these contracts like a standard lot. One contract, like, think of it like a standard lot. You know what I mean? It doesn't take a lot to get paid a lot. You just have to be on the right side of the market, obviously. And, you know, low risk, high reward setups. And that's why I gave it to you. Well, I gave you Euro, technically. I gave you this. I said, hey, look up here. We went up there. Let me come back to what I said earlier when you guys were putting the answers in the chat. Why do you think market maker models continue to work? Because we saw that on dollar, we're going to get the exact opposite on euro. Original consolidation, distribution. This is kind of like a shitty redistribution. Well, it's not a redistribution because we didn't trade lower, but this was accumulation. Man, I just marked up the wrong shit. Original consolidation, distribution. We trade lower, and instead of manipulation, the manipulation we got again was on dollar. Euro was accumulation, but it's gonna count like the same thing. Oh, we didn't trade lower, but that's accumulation. So right after accumulation, that's when you want to do your low risk buy. Then first stage and then second stage took us. You see that? It works because who was that earlier that said that? Naruto, right? Like I've always said for many, many years, this continues to work because it's programmed to do it. That's what I believe. I fully believe that. Are there times when the markets are going to be manipulated by, you know, the people in suits? Of course. You're always going to have that. You're always going to have someone out there that may potentially move the market with their fat ass orders, or, you know, maybe they just have like a stream deck like I do and just press a fucking button like this. Hey, drop a like on a stream. Right? I press drop a like and they press the fucking down button and that bitch goes lower. You know what I mean? They can do that. But think about it. If you've been here for a long time and the first time you heard somebody say that markets are manipulated, you know, markets are random, nobody knows how to predict it, right? Yet almost 8 to 9 times out of 10, when I mention a level on Discord, it runs there. Why? I would be 5 out of 10 all the time if markets were random. I'd be right, wrong, you know, right a couple times, wrong a couple times, whatever. You don't see that. Okay? I got like C's and D's in school, but I got a fucking A in our Discord. You understand? Like, forgive the ego, but I got a fucking A in our Discord. I'm hardly wrong. Hardly. And this is why. I'm waiting for something special, and then I'm seeing, I may not get the exact low sometimes, but I know, oh shit, we got accumulation. We're at our first stage. Okay, yeah, bet. We're going to fucking launch. Hey, Discord, watch out for this level. Whoop, done. I only wait, as a sniper would, I only wait for specific criteria, just like that. Either a sell model or a buy model or something close to it. Because you don't always need the exact models per se, right, by themselves. But it's just like what I said the other day. Find the liquidity, trade in that direction. Find the liquidity, trade in that direction. And that's all you got to do. So we should have FOMC here in just a couple minutes. I want to see what the indices will do. I want to see what the dollar obviously is going to do, and then probably the metals as well. I hope the metals don't go lower. I really want them to go higher. I want to cash out some of my silver here pretty soon. Some of it, maybe not all of it, but we'll see. Do you calculate your contract size at 1% in your account if you don't trade with Top Step? TradingView can do that for you. Yeah, Joe, I agree. Once you see it, you can't unsee it. But you have to be... I'll say this, chat. You can't just screenshot my screen. You can't just save my markups into a folder somewhere. Oh, John's markups. You can. You know, you're allowed to do that. I don't care. But what you have to do is just like a book. You don't just read a book and that's it. When you read a book, you have to write in the margins, underline, highlight, spend time with the ideas, challenge the ideas, right? It's the same thing in the charts, and it's the same thing that I teach you, right? Liquidity, concept, stop loss placement, all this shit. Man, look at those big gaps. We gap 10 points, 20 points like it's nothing. From 26 to 42, we just gap 20 points for like no fucking reason. Not no reason, but you see what I'm saying. We just magically jump or magically dip. right? So indices a little bit lower. Dollar hitting the rally stain. Hitting the rally. Yeah, that's going to put pressure on the indices big time. For lower, no big deal. Metals didn't do... Oh, God, look at gold today. Oh, my God. Let's get that off the screen. That looks fucking bad. So, that short would have been nice on dollar. Rally on euro. I wouldn't trade through FOMC. I wouldn't hold through FOMC. And you probably don't need to. You know, trading something like that's enough. And you can say, well, don't need the rest of the day. Know what I'm saying? I just want to watch on a 1 minute chart for a second. This is just small time frame, obviously, but there's a level of liquidity here leading up to FOMC right there. Right, low resistant lows. See that? So as soon as 1 o'clock release, right, like 12:59, and then 1, it just sinks, and it sank right there, right to that pool here. See that? So it sank right there. If I was a gambling man, I'm not a gambling man, but if I was, I would say we have a lower low on Dow. We have a higher low on ES and a higher low on NQ, or yeah, a higher low on NQ. That may be significant, that may not be. But I will tell you this. FOMC is at 1, and then meeting minutes is at 1:30. So we won't be here for all that. But I probably would expect some volatility for the remainder of the day. Which direction are we going to go? I don't know. We could go higher. It is a possibility. And I did say that on Twitter earlier. I said I was going to study an options play. I didn't buy contracts. But I'm studying the, I think it was the 523. Let's go back over here. It was the 523 0 DTE. Basically, it expires today. Option at 523. Because I was thinking FOMC might send us up here. So this might not be a buy model. It is starting to look like it, though. Original consolidation. There is some level of manipulation here. So that this would be the low risk buy. Again, if this was a buy model, this would be the low risk buy to send us above 523. But I'm not sure that that is the case. I don't know. But if you want to watch it, you know, I'll either be right or wrong, but I don't think I'm going to trade it. I don't think I would trade this. Mason may not be perfect criteria, but I would say at least high probability. You know, have a checklist. What you could do is you could take an index card. Look, I'll show you. Because when I take notes and stuff, when I read books, I have a bunch of note cards. You could take a blank note card and you could write what it is in order. Consolidation, accumulation, reaccumulation, manipulation, lower short, first stage, distribution, second leg of redistribution for the liquidity. And so you can say, hey, wait for this, trade that one. You understand? Wait for this one, trade that one. Or wait for this one and wait for this one and trade this one. You guys get that? Wait for manipulation. Wait for 50% to be crossed and then play first stage distribution. Stop at the manipulation high, just aiming for a 1 to 2. Yeah, I might use a wide stop, but I don't like getting stopped out. So I'll use a wide stop, relative wide stop, and then I'll let it pan out. And it'll either run to the highs or lows, or it'll just stop. But if you keep you know, oh shit, we barely came off that low here. Yeah, I wouldn't trade this. Yeah, I wouldn't trade this at all. If I did have to pick one to go long, it'd be Nasdaq. But I'm not going to do that. But yeah, you guys can literally just make a list. And you can remind yourself, yeah, wait for manipulation, wait for 50% cross, and then play the first imbalance, stop at the second one. Or if there's a mitigation model, then you play the mitigation model as part of the first leg of distribution or the first leg of accumulation. Now, do you see why having one model is fucking retarded? Like, excuse my French, but having one model is stupid. You're going to miss stuff. What happens if you hesitate? There's no models here, but at least that I can see. Let's go to dollar for just a second. What happens if you hesitate at the low risk short and then you don't take the first stage? You're just going to miss out on the rest of the move. You're going to miss out on the meat and potatoes because you couldn't get a little bit of gravy. Like, come on, fuck off. You're here to make money. You're not here to be perfect. You know what I'm saying? It's okay. If you hesitate sometimes because you know, it looks like it's going to continue higher, then just fucking wait. Just wait and play the first leg. Or maybe you just really, really want conviction. You want a win. You know, you want like a big ass trade because you want to pass a combine in 3 fucking trades. Look, I'm not going to tell you to do it, but if you want to do it, it would be the second leg every time. I would say just trade second leg by itself. But the reason I don't teach you that is because when you get it wrong, if you're trying to short a second stage and you're wrong about the model, that bitch is going higher and you're going to take a loss. So there are rules when you're bad at trading, and there are, I guess, a little bit different rules when you actually know what you're doing. Does that make sense? Like, for example, you want a super tight stop loss and a fat RR. Okay, low risk short, low risk buy. The last video I did on that was Dow Jones 5-minute time frame of that combine account. All the members can watch it. That was a low risk buy. And I held all the way through the day, all the way through lunch, all the way through all that consolidation, and finally hit the highs. And then I was a little bit greedy because I wanted the 420 level, and then it came back on me, and I just closed out at like 500 and some change, right? Growing that account, easy. That was a low risk buy. Highest RR is going to be the low risk short or low risk buy. You'll get good RR trading this first stage, short, or first stage long. The fastest moves, okay, yes, there are ways to tighten the stop losses on the second stage, but for beginner traders, I don't want beginners to get the wrong idea. Like, oh yeah, John, up candles, I could have a super tight stop loss and price runs in my direction. Yes, you can, but you have to get good at this. You need practice. You need a lot of experience. Okay? You can't just come in here and think you're going to own the fucking world because you know how this works now. No. You have to spend time with it. You have to take trades either on paper or demo or real or combine or whatever, or just straight up RR tool. You know, like pretend you would short. Where would your stop be if this was a real account? Where would your TP be if it was a real account? You know, practice like you play. So you'll get better and better, but I don't want to teach beginners to have super tight stops. It's okay to have a medium or somewhat of a loose stop loss. It's okay. What's wrong with entering on that with a stop up here? Oh, the stop should have went to the high end of that imbalance. Well, what happens if it fills that imbalance in on the upside and then rolls over? And your stupid ass took a loss on a down day, knowing it was going to go lower because your stop was too tight. Now you feel like a retard. Right. So, you know, don't have too tight of a stop, but don't let it be too loose. You got to figure it out. Okay. So with that, we are going to close it here. I don't have anything else for you. The indices continue today to be wildly mixed. And I can't read a market like that. I just can't. It doesn't, I can't find something that I trust enough to put real money behind, or even a combine trade. I don't trust trading this. I just don't. Okay? So with that, hopefully you guys learned something today. If you did, don't forget to drop a like on your way out. It would be greatly appreciated. Or leave me a comment in the chat for the members here. Or a matter of fact, I'll open it for like 2 minutes for everybody else, for the subscribers. I'll open it here. I'll keep it open for a couple minutes for the outro music. But if you guys want to leave me a comment, let me know what you think. Let me know what you like. Let me know what you want more of. You want more, maybe not curse words, but maybe you want more model examples. Maybe you want more stop loss rules, or I don't know. Whatever you want. Let me know. I want to hear from you. But yeah, y'all be good. Be blessed. I'll see you here same time, same place on Friday the 31st for the last day of the month.